Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, amazing people all around the world of crypto and blockchain. And today I have another amazing guest. He is the co-founder and the CEO of Yo. His name is Driss Benamour. Driss, welcome to the show today.
Thank you for having me, Jamil. Excited to be here.
You're very welcome. You're very welcome. I'm looking forward to our conversation, and let's kick things off. And I'll ask you first. What is your background, and is it a logical background for what you're doing now?
Yeah, so I spent like a decade and a half in fintech across various startups. My last gig was at Uber, where I looked after everything payments, fintech related financial products, and for riders, drivers. So we built essentially global financial systems and payment systems across multiple countries, over 100 countries, moving hundreds of billions of dollars in money flow. And so from there, the transition to crypto was quite natural. Because money systems are money systems, and I was quite excited to take what I learned over the years and apply it to a decentralized world. Yeah, and this all come about when I met my co-founder, who's our resident crypto degen, and he was managing money for friends and family, helping them invest in crypto and DeFi. And when I saw the amount of problems he was facing, my product like developer sense kicked in, and I was like, we gotta build here. And I made the jump from fintech to crypto. Yeah.
Awesome. Yeah, I stopped managing crypto on behalf of friends and family. I had all my money and their money in Celsius, so I ended up paying them back. But then I started my publication company. I'm like, this is a better fit for me. So I want to find out, about Yo. What's it all about, including your vision and your mission.
Yeah. So Yo stands for yield optimizer. So self-explanatory. And we started this, in short, Yo is the yield engine for the crypto economy. Simple. So DeFi is an incredible ecosystem because it unlocks yield that was previously reserved for banks to everyone, effectively. Problem is it's extremely hard to access. And so we 4 years ago when we started this, we're like, how do we make decentralized finance yield or on-chain yield accessible? And we iterated on various ways to solve this problem. And with all the learnings, we came about and we launched Yo 4 months ago as basically a unifying like layer that connects capital to yield on chain. That's what Yo is about.
Got it. And how do you see your innovation helping the DeFi ecosystem overall?
Yeah. So it's about bringing more capital to DeFi, right? Crypto is a little over 4 trillion. DeFi is about 150 billion. And what's blocking access right now is its complexity, opacity, and we'll talk more about that. And so what I want to do is bring this incredible ecosystem to the world. And I've been like coming at this problem from various angles. And I believe Yo is now the angle to unlock essentially new inflow of capital and to make essentially decentralized finance home for basically yield generation on crypto.
Got it. I like that idea. Like I said, I had my money in Celsius before they were paying me yield, and I didn't realize that I was the yield. So decentralized yield is much better, right? Um,
That's right.
so
That's transparent, and that's one key thing we care about. Yeah.
awesome. So I want to find out, what is risk adjusted yield, and how does risk adjusted yield work?
Yeah, risk-adjusted yield. So that's an interesting term, but it's an important one. So before we built Yo, we built a product called exponential.fi, which is the same company, just a different brand. And what Exponential does is a risk framework for DeFi. It grades things from A to F, like a standards and poors for DeFi, so people can understand the ecosystem and the risk they're taking. Like in short, like I was like, I'm not comfortable building an investment product without having this risk layer in place. That was the right thing to do. It didn't exist, so I built it. And what it does is it's very transparent. You can see this pool or liquid or yield opportunity is an A. This pool is a D, and you can like unpack it. Why is it an A? We have our entire framework is transparent. You have a full research report. It covers 97% of DeFi, and that was kind of a bedrock that I built out of necessity, effectively. So now you can say I can get 3% with an A, or I can do something super risky and get 40% with a D with maybe I'll lose my money then, and anywhere in between. So risk adjusted yield, once you have the grades, A, B, C, D, F, and those are basically probabilities of losing your money in simple terms. We summarize into a grade, but we actually do have probabilities. From there, you take yield and you deduct risk. That's what risk adjusted yield is. So if you get like 300% yield, but you lose your money, there is absolutely no point in doing that, right? And so when you invests, it optimizes for maximize yield and minimize risk. That's what risk adjusted yield is. Yeah.
Got it. So I interviewed someone back in, oh God, I think it was my second season. This is
Mhm.
season 9, 3.5 years ago, who had built a DeFi scorecard.
Mhm.
So I want to find out how your DeFi scorecard works, and how you get the letter grade that you do for the different DeFi protocols.
Yeah, absolutely. So our scores, by the way, are transparent. They're also on DeFi Llama directly, so uh, available there. But the way it works is it's an objective framework. We take hundreds of metrics like protocol design, protocol code quality, chain design. Has the protocol been audited? Does it have fundamental risks like reflexivity is a common one. Reflexivity is the UST Luna thing, if you remember, and a lot of like protocols may still have that kind of structure. If it's a lending protocol, is it under collateralized, which is a key risk? And so we take all of these objective metrics through a scorecard and like aggregate them into a grade. It's objective. Like there is no subjectivity into the framework. The framework is not perfect. There is no perfect framework, but it's quite predictive. We have now 4 years of data on it, and D's and F's have had issues, while A, B, and C's, which are safer, like haven't. So that's basically how we do things. Yeah.
I remember there was a coder. His mantra was I code in prod. And I'm like, the heck with the sandbox and the QA environment, right? You code in prod. So that was a little scary from the DeFi perspective, right? So yeah. So there are some problems in DeFi. There's like, I think like three core problems in DeFi. So what are they, and how do you solve them all?
Yeah. So the three core problems, the first one is opacity. Like you don't know, a lot of protocols are complex or operate like black boxes. So you don't know what's risky from what's not. And that's what the risk rating solves for effectively. The second one is fragmentation. There is 15,000 pools. There is like hundreds of protocols. There is like dozens of chains. And so if you're like trying to navigate this, like you're like, where do I go? And what's going on? And the last one is complexity, right? So bridging is hard, right? You send $1 million in a vortex and you pray it arrives on the other side, right? Investing is hard. Like the UX is very clunky, and the yield moves a lot, right? So you can invest in a pool at 20% today on any protocol like Morpho, Uniswap, Aave, and tomorrow it's at 2%, and you got to move again and keep chasing that yield. So with all these problems, like you have to be very advanced to use DeFi. And what we aim to do with Yo is a very simple product. It acts like a savings account in simple terms, right? You have ETH, Yo ETH, Bitcoin, Yo BTC, USD, Yo USD, Euro, Yo Euro, and soon Sol, Yo Sol. So very simple. You don't have 75,000 volts. Uh, and then when you go, you have simplicity, but then you need to understand what happens under the hood. So you go into from ETH to Yo ETH, for example, the vault allocation is super transparent. You see where the ETH is being allocated, and so on and so forth. And you see what the algorithm does on a daily basis, etc. So it's key to simplify, but to be transparent as well.
Got it. So I haven't heard so much. I mean, they probably still exist. I
Mm.
used to hear all the time about different bridge exploits, right?
Mhm.
It's not a daily thing anymore, but it's still. I want to find out what the status of it is and what the improvements are, so we don't have those bridge hacks, those bridge failures.
Yeah, so bridges have improved significantly these days, and so that's why you see less of them. So you still have some risk, and their protocols like any other, so they're going to go through our rating system and so on and so forth. But today you do have a good amount of bridges that are rated A or B that are safer, well designed, and that haven't been hacked. And it's a good thing. That means the ecosystem is maturing and has essentially hardened that weakness within the overall DeFi ecosystem. Yeah.
That's good. That's good. What gives them the A rating?
A rating would be uh, it's been around for a long time. It has multiple audits. It's designed right. It's decentralized. So level of decentralization is there. So those are like the key things. There is like hundreds of metrics, but at a high level, those are the most important ones. Yeah.
Got it. Good. Okay, I'm glad to see those improvements. so, um, so the yield engine, right? Why? Well, I want to find out how Yo is the yield
Mm.
engine for the crypto economy and how you automate yield optimization continuously.
Yeah. All right. So let's talk about how it works. So we first thing you do is you whitelist protocols and pools and chains. You make them available for you to invest in. So eventually, you will have all of DeFi available to invest in. So and then you're like, cool. Now I can invest in Uniswap, Morpho, Aave, Compound, whatever, like Pendle, and we have over 100 integrations. Um, so that's the starting point. From there, you have an algorithm that runs and that says, okay, I've received 5 million bucks. I want to allocate it by maximizing risk adjusted yield, which is maximize yield, minimize risk. Where do I put it? And it looks at the suite of pools it has available and it allocates it in order to maximize your risk adjusted yield. And it has some constraints like diversification. Like you don't want to put more than X% into a certain protocol or Y% into a certain chain. Or if gas cost is too high to enter, then it doesn't make sense to enter right now. You may need to enter over time. And so effectively, it's a maximization algorithm with constraints, logical constraints, and funds get put into the best pools, any new funds, and any withdrawals gets taken away from the lowest yielding pools. And every day it runs. They say I have 100 options I can invest in. Here's my current allocation. What do I do? And then it reallocates. And so what you wind up with is every day it harvests the best yield. Um, you have a new chain like Plasma is hot these days. We've integrated it already, and now Yo is gonna the Yo algorithm will like decide based on risk and yield again how to allocate to new opportunities over there. So that's how Yo works, and the the design is very much needed because the dynamic design, sorry, is very much needed because DeFi is so it moves a lot, right? Yield moves a lot. There's new chains, new protocols all the time, and so you need essentially this concept of basket. But in TradFi, the basket is static or it changes quarterly. In DeFi, the basket has to be adjusted daily in order to like harvest the best risk-adjusted yield.
Got it. So I'm going to make sure I understand as a consumer, as a customer coming onto your platform. I come on the platform. I choose my I choose how much money to put in. I choose my allocation. I say I want the most yield. On a daily basis, you reallocate into these because it is impossible to keep all the DeFi yields daily. And at the end of the month, at the end of the quarter, I should be able to outperform TradFi.
It's even simpler than that. You don't choose your allocation. Say you have ETH and you want yield on ETH. Yield on ETH is ranges 5 to 10%. You deposit ETH and you get back your ETH, and that's it. You're done. It's one click. Then Yo will take care of allocating the ETH optimally, automatically, and continuously. Yeah.
Got it. But I still beat TradFi at the end of the day.
Well, like the comparison for TradFi would be Yo USD. Yo USD, you deposit USDC, for example, you get back Yo USD. Yields range 10 to 15%. So yes, you would beat TradFi because yields are very attractive in DeFi.
Yeah, sounds good. Sounds good to me. When can I use it? I'll ask you at the end how I could use it. But I want to go into something that I used to think was boring that seems to be more and more interesting as the day goes on, except from a return perspective. Stable coins, right? How will the passage of this Genius Act and what the Congress is trying to do with the Clarity? Well, the Congress is off for a break now, but how the Clarity Act, like, how is that going to affect DeFi both positively and negatively?
Yeah, that's a great question. So it's mostly positive. Like what it does is it creates a framework, a regulatory framework that legitimizes things, right? It increases trust. It allows for more innovation around stablecoins. And basically all compliant stablecoins have to be backed by cash or cash equivalents, and that creates a harmonious, essentially, integration between Web 2 and Web 3 because you need a bridge between the two effectively, and so that basically moves us in that direction. So it's mostly positive, and it unlocks innovation in a major way. It also unlocks other things, like there is a lot of stablecoin based payment networks that are coming up. And so the backbone of payments is switching to crypto and stablecoins. And so having a regulated stablecoin, for the lack of a better term, or properly designed stablecoin, is a powerful tool and important to help like adoption on a global level of these new payment systems. So it has all kinds of benefits. Now, the interesting thing for us is the corollary is once you have a myriad of stablecoins that are created, you need yield. Just like in TradFi, you're going to place your assets in treasuries, for example. Like where are you going to place your stablecoins to generate yield? And that's where we come. That's where we come in. DeFi is the right home for yield generation on stablecoins, and Yo, or Yo USD in this case more specifically, simplifies access. And so we see Yo USD as the home for stablecoins as they grow. Yeah.
And so it sounds like there are good benefits. What would be some of the drawbacks of negative?
Well, the main drawback is, decentralized finance, right? And with one-to-one backed stablecoins tend to be centralized. And so now you have closer ties to traditional finance effectively and more centralization, which can be mitigated in many ways if if the collateral is right and with the Genius CAC it is, but it is a level of centralization that contrasts with decentralized finance. Yeah.
Great. So I'm thinking about this a lot, and I'm like, I'm trying to reconcile it in my head. They say a main reason for use of stable coins is for payments, right? So I don't like to shill my holdings on my podcasts, but as a Litecoin holder, I'm like, my coin's used for payments more than most cryptocurrencies, and if you're looking for yield, as the value of crypto goes up, Litecoin and others like it will go up, while the stable coins will not. So why not just use Litecoin or XRP or Cardano or any other payment crypto instead?
Yeah, I mean, you have a need for both, but if you want the world to adopt crypto as the backbone for global payments, like they're not going to want to, like a lot of players are not going to want the volatility, right? If I'm a major company and I'm using crypto-backed payment systems to move money for my treasury, I'm not going to want the volatility. I want something that's safe and stable. And so the fact that we have one-to-one backed stablecoins is key for trusts to unlock global usage. Not to say that there isn't a need for non-stablecoin options. I think they can live for other use cases, but for like everyone, companies, banking systems, banks to start using these types of systems, you're going to need something that's simple, back to one and stable. Yeah.
That makes sense. Okay, thank you. Thank you. Big
My pleasure.
corporations, big corporations do not like volatility. I can get behind that.
Yeah.
So I want to find out, more about your vault. Why is the last vault you will ever need? First of all, then I have some follow-ups after that.
Yeah. You put your ETH in your ETH, or your BTC in your BTC, or your USD in your USD, and you forget about it. It does and harvests the yield across all chains, all protocols, and the entire DeFi ecosystem. We have over 100 now. Our vision is to have all of them. And so it is the last vol you ever need because it's deposit, set and forget, and you get the best yield on a risk adjusted basis. Risk adjusted is important because again, if you get the best yield and you use your money, there is no point. That's why we call it the last vault you'll ever need. So it replicates a savings account like experience here, which is like you park your money in there, you earn great yield, and you go do something else instead of like bridging or worrying about whether you're going to be losing your money or moving funds across different protocols. All these problems that I talk about go away. And this approach is really important to unlock again DeFi to the world because it's simple. Like I don't want like I have ETH. I'm planning on keeping it for a while. I want yield on it. I want 5-10%. I put it in your ETH. Done. There is no need to think about oh, there is this new protocol. Like there is this new chain, and that's where the yield is. Well, cool. You're always going to put it there, right? Because that's our job. That's what the algorithm does. Yeah.
I'm thinking that you're going to force banks to innovate, because they're going to see you as the competition, and they're going to be forced to give people greater than 0.25% yield on their accounts, right? So what innovation, in addition to innovations, actually, yeah, innovations about what innovations do you think are coming down the pike in both DeFi and TradFi because of what you created here?
Yeah. So, great question. I think eventually banks may use Yo. That's where it's going to come down to, or on-chain yield in general, right? Because the goal is to get more capital into decentralized finance overall. And so Yo today is packaged, right? You get a simple token, Yo ETH, Yo BTC, Yo USD, Yo Sol, etc., and you earn yield. But there is an infrastructure play, like in the future, you can essentially allow a third party, whether it's a bank or an ETF provider, to create their own yield vault with their own risk parameters. And it could power their savings account or whatever their financial product they want to design. And so you could, like a simple use case is you could think about a super safe yield vault. Like it only has A stuff, vanilla, it has low yield, maybe like 2-3%, up to 5%. And it's like AAA type deal. Maybe someone will want to create that. Or others will want to create more creative things with like more advanced strategies, etc. Yo is an infrastructure, right? Right now we've used our own infrastructure to create something simple, but we can open it to the world for banks and others to access on-chain yield. Yeah.
Got it. So that sounds exciting. It makes sense to me. And I'm just trying to picture, everybody using infrastructure, that world where you're adopted into what financial products or new financial products do you think would be possible? You mentioned creativity. So what do you think would be possible using your design for structured products or different kind of products?
Yeah. So today, focus is important. So our design focuses on yield generation, which is already a tall order to execute on properly. So you can have all kinds of yield type products. That's what we're focused on. So you could create different flavors of ETH generating yield, different flavors of Solana generating yield, for example, depending on risk parameters, and so on and so forth. In the future, depending on the regulatory framework, you could also create portfolios of yield generate baskets of yield generating stuff, but that's going to need some regulatory framework before that happens. So fundamentally, what YO allows you to do is you can create yield generating. You can generate on-chain yield on any token effectively. That's what it allows you to do. And so with there, like you can slice it and dice it and create all kinds of instruments pending again regulatory framework for some of them. Yeah.
Yeah, I see it. My first real job. I worked at AIG for 12 years. It started in 2005. My first job there was in the third party asset management business, and I did the AUM reporting, and I saw the different suites of products and everything that we had. We reported. I was picturing we could actually use the Yo platform to recreate that whole entire thing. And companies, asset managers could build a whole entire third party AUM business based on how using your product.
That's right. That's right. Exactly. What's interesting though is our product is algorithmic. So you don't have humans or asset managers. You set parameters. You say, I want this level of risk. I want these specific protocols. I want these types of assets. I'm targeting this amount of yield. I want this amount of diversification. So you just set parameters. And then the algorithm is going to, within your constraints, allocate to maximize yield. That's what YO does. And our innovation is the fact that we're algorithmic here. Yeah.
Sounds exciting. It sounds really exciting to me. So I look forward to us talking in about a year from now and tell me about all the successes you had. So this is awesome. So I have one last question. I want to thank you very much for speaking with me today. And I have one last question, and it's easy. How can people find out more information about you, about Yo? How can they start to use Yo? How can they do that?
Yeah, absolutely. So simple. Yo launched 4 months ago. It has grown to about 80 million in deposits in 4 months. So it's going well. You have two places. You can find us on X at Yield, simple, and it's yo.xyz otherwise. And it's a dApp, so it's a decentralized app. Open, you connect your wallet and deposit.
Awesome. Thank you very much for your time today.
Thank you, Jamil. It was great to be here.